My buyers just bought a house and assumed a 2.875% mortgage. This is the equivalent of a 30% discount to what they would have been paying. It's absolutely insane. What makes it crazier is that this listing was not advertised. If you go to Redfin or Zillow and you search assumable listings in your area, you're likely to find very few. And the few that you do find, the majority of them will be VA. Now, I'll just go ahead and tell you, this is not VA loans. You don't have to be a veteran. All you have to do is be qualified for a conventional mortgage. But the problem is nobody is advertising that these are assumable. In fact, of the 84 active listings right now in Nashville that are FHA assumable, and by the way, these 84 are 84 from 2021 FHA loans. One is advertising that it's assumable. One. So we actually found one that was assumable. We worked with our buyer to get them into contract. Now, I knew that if we made an offer requiring assumption, this was a competitive house. It had multiple offers. And fortunately, we got in contract before those other offers were made. But we didn't even bring up assumable. Why? Because it would have been a non-starter. They were going to get offers. Why would they work with somebody for an unfamiliar process and do an unfamiliar thing that everybody's saying you can't do? Why would they do that? They wouldn't have taken the offer. So what we did was we got into contract, and then I offered a half a point of my commission if we could pursue the assumption of the seller's mortgage. Okay, because I knew that the seller had an FHA loan, and all I wanted them to do was make a best effort. I also knew that my buyers needed a house. They were going to buy this house either way. Okay, but when we offered a half a point of my commission, it's $2,500 on this house, they were like, sure, yeah, we'll help you. We immediately went to the servicer and we closed it within 4 weeks. Guys, it wasn't any harder than qualifying for a mortgage. In fact, in some ways, it was easier. I will talk to you about some of the pitfalls, but the biggest pitfall in the whole process is that people are unfamiliar with it, that realtors will tell you you can't do it, that banks will tell you you can't do it. In fact, the mortgage servicer that ended up giving us this assumable mortgage told us twice that we could not do this. We had to literally send them a very direct email telling them their own rules and why HUD required them to assume this mortgage. And then they allowed us to assume it. But that being said, we didn't have to change close date. We didn't have to change anything in our contract. We delivered on everything we put in our offer. And the seller worked with us, we worked with the seller, and they got a 2.875% mortgage. So let me hit a few things really quick, both misconceptions about FHA loans and the hurdles it takes to assume a mortgage. Now, we are talking about FHA loans, okay? So typically when people think FHA loan, they think first-time home buyer or, lower quality house, cheaply built, cheap houses. This is all not true. Of course, there's a spectrum of homes. There's low-cost homes, but there's also extremely expensive homes, just like I showed you. But you don't have to be a first-time home buyer to pick up to assume an FHA mortgage. And in fact, there's no upper income limit on these. You just have to qualify through a manual underwriting process, which sometimes has different rules. But in general, if you qualify for a conventional loan, you can qualify to assume an FHA loan. Okay, it's not that hard. Okay. The other thing is this misunderstanding that it takes a long time to close. That is false. VA loans assumption takes a long time to close. FHA is required by HUD to be 45 days or less, and we closed ours in 4 weeks. We didn't even engage the mortgage servicer until after our inspection period was over, which was almost 10 days into the contract. And we went under contract on May 27th. We closed on July 7th. And keep in mind, there were 2 holidays in between. So it's not like we had a bunch of business days to spare. We did this very quickly. Sellers do not know that these are assumable. They're not going to tell you, but they will work with you if you tell them. And if you do, like we do, we actually offer a financial incentive to the seller to work with us on assuming, and it makes a difference. Nobody understands the process. Okay. I'm just telling you, that's the biggest hurdle is everybody's so uncomfortable. Now, we did it in 4 weeks, so it's not that hard, but I'm telling you, if you talk to your agents, they're going to tell you you can't do it. If you talk to bankers, they're going to tell you can't do it. Nobody's making money off this. And so they're not going to help you do this. And that's the tragedy, is that 98% of these houses that are listed right now are going to be sold and no assumption is going to happen. And that's just really, really a tragedy for the buyers out there who are trying to do the best they can. You have to be a primary residence. This is for people who are trying to buy and live in a house. This is a great opportunity, but guess what? It keeps investors out. It gets much less attention. So people aren't paying much attention to this. Okay, we talked about credit requirements. Don't need to talk about that again. You do have to have the seller's permission. Now, the good news for the seller is they're completely relieved of liability. So if a seller goes through this process, they're relieved of the liability. You own the loan when you buy the house. And if you stop making payments, the foreclosure and the credit and everything else, it comes back on you. The seller is completely relieved of any liability. The biggest hurdle I see on this is a large down payment. Guys, it's going to take a large down payment. You are going to need, at minimum, probably $30,000 to be able to do this. And it can go all the way up to what my buyers had to put down was $160,000. Now, they were fortunate because they weren't first-time home buyers and they made a lot of money from their previous home. So they were able to buy this house and pay the difference between the sales price and the loan value. So the best situation here is if you have a decent amount of money you can put down, this is a really, really solid approach. And that would be the biggest hurdle. Again, this is the greatest wealth hack there is. If you are a buyer or a seller, if you're a seller and you don't know whether or not you have an assumable mortgage, reach out. I would love to help buyers and sellers capture this assumable mortgage, because if you don't capture it, it just gets paid off and it disappears and nobody gets that value. It goes back to the bank who has an overinflated asset on their balance sheet. And that makes me sad. So with that being said, I hope you guys have a great week and I look forward to seeing you next Saturday.